The content presented in this episode is not financial advice and should not be viewed as a recommendation to support any specific project. The views expressed are personal opinions only. Welcome to Relay Chain, a podcast produced by Parity Technologies, where we discuss all things Substrate, Polkadot, and Web3. Welcome everybody to another episode of Relay Chain. I'm super excited for this one. I have Yubo here with me from the Parallel Finance team. How you doing, Yubo?
Doing pretty good. Thank you for asking.
Awesome. Thanks for being here. Before we get into all the amazing stuff that we're going to talk about today, I want to congratulate you for securing your parachain slot. That's very exciting. We have a new batch of parachains onboarding right now, and you are one of them. So that's awesome. Congrats on that.
Thank you. We're super thrilled and excited about that. I can't describe the feelings of having a new parachain, which is make the whole team worthwhile for the efforts we put it in.
Yeah, let's talk about how long have you been building Parallel Finance? What's been the timeline, and how'd you get to the point you're at?
We started the company 6 months, or maybe right now it's 7 months ago, and then we are relatively new to the Polkadot space. But as I said, this is such an amazing time for us to see actually live, and then start to make it more decentralized and start to launch the functions on top.
Yeah, no, that's amazing. In such a short period of time that you were able to spin all of this up, and now you're live as a parachain. We've seen it takes quite some time for other blockchains to develop and even launch at a basic functionality, years even. So how were you able to get this going in such a short period of time, 7 months?
Yeah, that's a good question. I mean, I guess we just sort of hire a lot of really good talents. We have a team of over 20 people, and we're expanding to over 40 people very soon, maybe in the next quarter or so. And then I believe in the powers of having a strong team to delegate and work on different issues, so that the whole execution speed can be faster. Yeah, I think definitely the secret is to use the word to attract the best talents in this space.
And this might be a bit of a shameless plug, but does Substrate have anything to do with the ability to develop a blockchain faster?
Yes, I totally think so. So obviously, compared with developing an application on Ethereum smart contract is much more complicated. But compared with other solutions on the markets, I think Substrate provides a perfect framework to customize your own blockchain demands and in a faster way, because all of the modules are modularized, as I said, and it provides you with the basic peer-to-peer modules, consensus modules, runtime modules, and things like that. So the framework is amazing. That it is easy for developers to build a customized chain.
That's very cool. So before we dig into the technical aspects of the modules that you were talking about that make up Parallel Finance, maybe you want to give us a nice overview of what is Parallel Finance.
So Parallel Finance aims to help build the best DeFi solutions in the Polkadot space as a start. Eventually, we transition to multi-chain strategies and even want to bridge with normal consumers. So on a high level, we have 3-stage kind of strategy. First stage is we want to provide the best solutions as a DeFi chain in the Polkadot space. Second stage, we go after multiple chains, including Ethereum, and build solutions for the other sort of DeFi markets. And then the Ethereum DeFi market has around maybe 3 million, a couple million users in total, and 200 million TVLs. And then eventually, we're thinking the most important thing that matters to us is how to maximize the social impact, which we want to impact for 1 billion people within the next maybe 10 years. So how do we do that? We have to design a layer that is sort of hybrid, similar to a CeFi kind of solutions. And then so people can use and people can actually, onboard with an easy interface, similar to Robinhood. So we would have a separate solutions for that. And then try to scale the team and build that in the next couple of years. So I would say Parallel Finance start from a niche market and eventually go to the mass markets. For the adoption of sort of decentralized finance by providing a more financial inclusions to the people, financial diversity, and then the efficiency to the society.
Yeah, that makes a lot of sense. Aim for crypto natives first, the kind of people that already are in the space and understand it, but with the end goal of targeting, the quote unquote normie, the person that hasn't quite taken the first plunge into crypto, but wants a familiar experience. So I see that's your goal. Okay. And so you recently secured your spot on Kusama, and I understand the goal is to participate to become a parachain on Polkadot. Is that right?
Correct.
Okay. Cool. So for those listening that don't know, if we refer to Heiko, that means the canary network on Kusama, and Parallel it will be the name of the parachain on Polkadot.
Correct.
And okay, so let's dig into the technology behind Parallel Finance. You've mentioned a bunch of the modules that you used right out of the box that are available in Substrate. Like what kind of modules were those?
So that's a really good question. So we basically use the very standard Substrate, frame to build the whole technology spec, and then we pretty much use everything that I just mentioned about, like from the the runtime to the consensus layer to the peer-to-peer networking layers and things like that. But most importantly, we build all of the customized palettes in the runtime itself, and then we provide functionalities into it. On top of that, we also use the XCM V2 as a basic framework to your messaging protocols to talk to other parachains in this space as the interoperability solutions for us.
Yeah, there's so much that I want to kind of touch in on that you mentioned there. So right off the bat, we have like some very standard things that are common across some parachains. You have on-chain governance, so holders of the HKO token, the Heiko token, are going to be able to vote and delegate their votes to council and to vote on referenda and that sort of thing. That makes total sense. But then you also have some interesting utility for the token in terms of how the token is going to be burned as people use the platform. Do you want to talk a little bit about that?
Yeah, 100%. So we are trying to, provide a really good token economic incentive for people to hold Heiko tokens. And then one of the mechanisms that we burn token is partially from the insurance pool that we have, or from the protocol fees pool that we have, and through the governance decision, community decisions, we are able to burn additional tokens from the markets once we accumulate large amount of fees in the platform in terms of dots or Kusama. And then the majority of the fees will be definitely used for the coverage of the insurance pool, but the actual portion of that we can consider to burn the circulating tokens.
I see. And so that was like an upgrade that you made to the original tech stack that just comes out of the box with Substrate. Very cool. And then you have also something I found super interesting was this idea that validators will also need to hold HKO in order to participate in the system. Can you talk about that?
Yes. So first of all, we have collators in the network, so people can run collators to earn additional HKOs, which is coming out soon to secure the stability of our own network. And then we also select validators for Kusama and Polkadot in order to provide something called liquid staking solutions, similar to Lido. And so there are 900, currently active validator for Kusama, and then there are around 900 that are waiting. There are a lot of matrices that we are looking at to justify what is the best validator. So one of them is, their commission fees per era. What is their, historical error points that they earn per, as a proportion to other, error points earning by other validators. And then we're also looking at their nomination amount. The less nomination amount, the more profits or the, block rewards each nominators can hold. So that's the basic algorithms. On top of that, we want to incentivize people to hold more tokens. And then the way that we do it is by providing a whitelist. So whoever hold additional HKO tokens as validators and put into our contracts become a whitelisted validators. So then we start to look at their specific data from the historical standpoints and then select from the whitelisted portions instead of looking at a whole 1,800 validators. And that's kind of, first of all, make the system more efficient by sort of self-selecting whoever provide some sort of insurance already. And then the other thing is really just to make the algorithm more efficient and faster is to execute on chain.
Yeah, I think that's an amazing service to provide. I know that like some of my friends that I've talked to about getting involved in Polkadot and Kusama, that is one of the sticking points for them is nominating validators. It's like there's a lot of different parameters involved, and you want to be able to assess these different validators because you're putting your funds at risk. So I think it's very interesting that you're creating an algorithm that kind of gives people an idea of that risk and tries to select validators that are going to be more reliable. And I wonder, will you be able to open this up to the general community and like make these algorithms public so that people can use this information maybe across other validator systems, not just for Parallel?
Yes, we can definitely do that. And then this is part of the plan to make things, all it's actually technically open source. It's just the specific parameters we haven't open source because we're, sort of still like, testing out. But yeah, part of the plan is to open source.
Yeah, that's awesome. Yeah, I think that'll be super useful for
Technically,
everybody.
technically, like we can also do that too. Like, so if people don't want to use our platform, but they want to use their own like self, sort of, they don't want to do liquid staking, but they just sort of want to use our algorithm to select the validators. We can also potentially provide that solution to the user as a product itself to make the staking more easy to use. Everything doesn't go through our chain. You just directly, talking to the relay chain, but then you use a better front end when you use the algorithm. So that's something we can also provide.
Absolutely. I think that's super valuable there. You were talking about making it accessible to the general public. I
Yes.
think that's a super good product to provide. Another use case for the Heiko token is it's used in like the security module, and I'm very curious about that. Like, how is this used to hedge risk and incentivize rewards, and so forth? Can you explain that a bit?
Yes, 100%. So I'm not sure if you guys familiar with the Aave security module. Essentially, they mint additional Aave on a pretty much on a daily basis, maybe 1,000 Aave tokens, and then the people who stake into the security module contracts, they have to stake Aave tokens, would be able to earn the additional rewards. However, there is a chance that they get slashed by up to 30% if any network shortfall or any losses happens. So similar idea here. We had a customized contracts or pellets that host those funds, and then we stream additional rewards. However, if there are any security issues that happen that causes some shortfall into our protocols, then a portion of that funds will be used to cover the loss. So it could be 20%, it could be 25% or 30%.
Okay, yeah, that makes sense. So users can participate by putting HKO into the security module, and they're rewarded. And anytime that we're using our tokens for other purposes, I'm curious if those tokens also can be used in governance, because your token has governance rights. And so, like for example, when we're staking DOT in the proof of stake algorithm, you can also use those DOT to vote in governance. So would that be the case with this kind of security module?
Yeah, yeah. So that's something that we plan to do for sure. So all staked HKO tokens will be used for on-chain governance, and then casting their votes to a specific proposal or referenda.
Nice. Is there anything different about your governance model that people might want to know, like being familiar with Kusama or Polkadot?
For now, we try to make the same system as Kusama or Polkadot just to make people easy to onboard. Eventually, we're thinking about some sort of credit systems or some sort of identity system. So once they have identity, then we could potentially increase their voting powers once they had a pretty good history of votings or like behaviors on chain.
Very interesting. Yeah, I think that it's a tricky problem in the DAO space right now in token voting systems where we see a lot of voter apathy or just like absentee voting kind of thing. Yeah, do you have any thoughts about how to optimize that? I think that you kind of just highlighted one of the mechanisms by increasing people's voting power based on past actions and engagement. But do you have any other thoughts around like how to increase engagement in terms of governance?
Yeah, that's a great question. You always ask amazing questions. So engagement issue is actually one of the largest issue for coin-based voting models. So if you read a Vitalik post, there's a lot of issues with the coin-based voting models. One of them, the biggest one, is obviously the lack of participation. One of the common solutions is delegation. However, I still kind of feel like the incentive is not 100% aligned. Then regarding the question you asked about the participation rates, we are lacking some proper incentive mechanism for the correct voting results, right? So even if you vote for a correct results, especially for smaller voters, they don't feel like their contribution really matters to the whole community because it is determined by the supermajority or the simple majority. So that's kind of discouraging for smaller voters. So their sort of good idea are not able to be heard. And everything have a multiplier because of their coin holding powers. So that's actually give more incentive for the bigger holders to vote the right decision, but smaller holders, they just sort of, okay, my vote doesn't really matter that much. Why don't I just delegate to someone else? So one way to do that is actually to create some more incentive around that. So even if you have smaller votes, but it doesn't matter your percentage, but as long as you vote for the right ideas constantly, then you get a better score, or you get a better reward system in the protocol. Maybe you get a better fee model, or maybe you have more voting power in the long term. So that actually going to make people more likely to vote for the optimal outcome. And then that's one way that I'm thinking about. The other interesting way would be sort of create some gamification to the voting systems. So let's create a role called protocol politicians, and then let's create NFTs for them. So whoever vote for the right decisions, you get the first 1,000 people who vote the correct ones. Boom, you get the coolest NFT on our platform. And then by holding that, you prove you have some social credentials and then social powers within your friends. So that could be another really interesting mechanism to make things fun, because you don't want to make you know
Yeah, no, it's definitely a tricky thing. Like we want increased engagement, but yeah, as you said, politics can be boring, and we don't want to over incentivize where then people are no longer incentivized to become knowledgeable, and they just like click vote 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 because they're hoping to get the incentive. So I think it's a tricky balance. Another question about governance is, are you guys employing conviction voting for your governance? So like a smaller holder can get a multiplier on their vote by locking it for a longer period of time?
Yes, we're definitely interested in that. Yes.
Perfect. Yeah, that makes sense. A few episodes ago, we had Zeitgeist on, and they were talking about futarchy, which was a new concept for me, but I thought that was super interesting. And it kind of sounds a little bit similar to what you were saying there when by showing that you are voting with the plurality, quote unquote, making good votes and giving people some credit for that over time. So I think that's an interesting use there of using futarchy.
And it's going to be interesting because sometimes it's really hard to argue what is the right votes, what is the wrong votes. It really depends on the perspective that you're looking at. As I said, like some people look at short-term price movement, some people look at the long-term, market shares of the protocol. So it's really hard to judge which one is better. And then technically, it has infinite possibilities if you want to simulate the results, right? So say, for example, there are two possible outcome, A and B, and then some people vote A and some people vote B. So for the people who vote A, if they want to, calculate the marginal benefits of voting A against B, you have to sort of simulate the results of voting B. However, the world is super complicated. By voting B, you can create super complex, results that even the supercomputer cannot simulate. So you don't know the actual results. So it's not deterministic. So I wouldn't say that there's a deterministic way to determine like if it's a right vote or wrong vote.
Absolutely. I think how they address that in some futarchy systems, I guess in the case of Zeitgeist, is like they have some discrete kind of measurement before in the market. So it's like we will hit X by Y date, or we will increase, efficiency by this percent, and there's actual metrics, and then you can put stake towards the outcomes, and then at that date, then it becomes a discrete thing. It's like, did it happen or did it not happen? And those that didn't vote on the side of correctness in this case of the turnout, then they lose their stake, and it goes to the people that did. And then you can build some reputation over time based on being right more often.
That's like a prediction market, customized prediction market for voting.
Exactly.
You bet your stakes into a specific outcome. If they achieve, then you get it. That's super interesting, actually.
Yeah, exactly. These are some new things that I've been thinking about, and Zeitgeist introduced that concept to me of futarchy, but it's really not a new thing. It's been around for a while. I just hadn't heard about it. So
in the traditional like internet stuff, we always have A/B test, right? So the server would randomly select a portion of the sample to deliver A, and the other portion deliver B, and then because they control the variables, right, other variables, so you actually can clearly see the results between decision A and decision B. In a blockchain system, it's going to be interesting if we can sort of randomly select the users who can sort of use the proposal A and the user use proposal B. Then it's super clear that how much potential reward should we give to the people who vote on the correct results. And then if we simulate for a while, then it's actually pretty interesting. It's like kind of data driven decision.
Yeah, and I wonder, I mean, I'm sure it's possible, like with Substrate, you can make two similar palettes and then potentially give the option to the user which palette they're going to use, and then derive data based on what palette they use. Or you might even be able to do like you're saying, and randomly select based on their address, kind of thing, who uses which palette for a period of time. All kind of experimentational, out of the box thinking, just off the top of my head there. But yeah, I think everything's possible, given enough time and effort, I suppose. And Substrate makes that very possible with the flexibility that it has.
I think it's very possible, and it's going to be super interesting because a lot of the on-chain data can be tracked. Like a lot of people measure TVL as one of the important success, especially for DeFi's, and then so it's easier to measure that when you have like two palettes, right? So and then you can exactly see like, okay, through those palettes and with different parameters, which palette contributed more TVLs in the next period of time, and that's like clear and strong evidence to prove that which decision might be better.
Yeah. I hope to see that in the future. It sounds really cool. Okay, so we talked a bunch about like the protocol in terms of how it's run, but like what can users now actually use Parallel for? I want to talk about these sorts of things. And one of the products I saw that you guys offer is this leveraged staking kind of product. Can you talk about how that works and the different capabilities here?
Yeah, so we have a lot of products, and then I will definitely introduce you about the auction, the crowdloan product in a bit. But regarding the leverage staking, so what we can do, because we have money market and liquid staking protocols, what we can do is when the borrow rate of Kusama or DOT is lower than the staking rewards, then you can technically arbitrage the interest rate difference. So and then we capitalize that opportunity for every users in the space. So we'll give you examples here. If the borrow rate of DOT is currently at 5%, and then if the staking rewards of DOT is 12%, so what people can do is they can borrow at 5% as the capital cost, and then earning that 12% rewards as the revenue. So technically they can earn 7% return, basically risk-free, because you are borrowing DOTs. You use your staking derivative as the collateral to borrow the denominated asset, which is DOT. And then the staking derivative token, X dot on our platform, appreciate against DOT. So there is no price risk. There's only interest rate risk. If the interest rate flip, right? So the borrow rate is much, much higher than the staking rate. Let's say the borrow rate become like 20% and you are earning 12% by staking, then you're losing 8% per year. So you are likely to be liquidated over time if your collateral is not enough. So for us, we make it into a easy one-click products. So whenever interest rate difference is positive, then people can just say, hey, let me put some collateral, and then they will just keep on earning that additional interest rate difference until the interest rate flip. And then those people are going to get out. And then that would actually help to switch back the interest rate.
I see. Okay. Very cool. So that's leveraged staking. You also have this liquid staking, which we've seen start to like pop up on Ethereum as they migrate towards V2, but also on KSM and DOT now. So do you want to talk about the different types of KSM and DOT that you'll offer?
Yes, so we offer something called X dot and XKSM, which is our staking derivative. And then X dot and XKSM, the benefits of using our protocol is, first of all, is liquid. So you can technically stake much smaller amount that you want. And then second of all, it is available for as a collateral to use in a DeFi system. So as I said, you can use your X Kusama or X dot as the collateral to borrow money to do margin staking or to do additional crowdloan contributions and things like that. And then X dot and X Kusama is also a really good asset to be able to trade against multiple assets, such as like Polkadot's ecosystem projects. So it could be potentially a base layer, currency for people to use, because it just is easy for users to wrap all the interest into one single token, but you can also use things on top of it. So imagine like you use treasury bond, right? A US treasury bond as the base currency to purchase, your movie tickets, or, you purchase your house. And then you use that as a collateral to borrow more money to do whatever you want. And then the good things, as I said, is the fact that the treasury bond that you hold, like the quote unquote treasury bond, increase in value against the denominated asset, which is DOT. So you are earning that interest while you are sleeping.
Right. Crazy DeFi world out there. So many new concepts to kind of figure out. I want to talk about the unbonding time and keeping that DOT liquid. So typically on Kusama, you need to wait 7 days to unbond. On DOT, on Polkadot, it's 28 days. How does that work using Liquid DOT or KSM?
Yeah, so the way that we do that is we actually have two systems to ensure that liquidity is sufficient. The simple way is actually to use our money markets. So we have a money market on the back end, and then we have a middleman, well, managers in between. So if the people want to unstake right now, right? So what technically this middle manager is doing is say, hey, because this guy is trying to unstake, there is no principal risk. And then so I'm going to help this guy unstake for the next 7 days. And then I'm going to borrow a flash loan from the money market. Say, hey, because there's no principal risk, I'm going to borrow a flash loan for the same quantity for the user, and user do that. And then depends on the current market interest rate. Let's say the current market interest rate is, let's say like 2%, right? So, and then 7 days, it just technically like 0.038%. So as long as the user pays 0.038, which is 7 days interest payments, then technically you get everything back. So that's one way, easy way, and then we actually increase the usage of our basic money market protocol. It's kind of like a customized version of a flash loan. That's something we can for like instant unstake, and then just pay the market rates. The other way we can do that is through our newly designed AMM curve. So the AMM curve, the middle portion is a custom sum, meaning that you don't have any slippage while trading, and so this is kind of another way that we design where, if you trade a smaller quantity of the total pool, let's say 1/10 of the pool size, like the pool can be pretty large. The AMM pool between X Kusama and Kusama, or X dot versus dot, it could be pretty high. It could be like, I don't know, like 9 figures, 8 figures. If you only trade like 10%, 12% of the pool, then you are trading on a curve that doesn't incur any slippage, which means that you can just get your money back instantly. And then obviously, like if you trade large quantity, yes, sure, you have to have some slippage. So that's kind of how we do. And then we provide like liquidity stability pool on two sides, so that whenever the price is moving, out of the range of the current exchange rate, right? The price of X dot can be different than the exchange rate of X dot. If it's different, then the stability pool can come in and do the arbitrage. So that's a little bit more complex, system to help people unstake. However, think about two solutions. The first solution is you pay the market rate of 7-day interest payment or 28-day interest payments. The second solution is you technically pay the trading fees, right? So it could be different, right? So the second solution is you're paying maybe like 30 basis points, and then the first solution you can maybe also paying like 30 basis points, depends on interest rate. If the interest is pretty low, you should use the first solution. If the interest is pretty high, then you can use the second solution.
I see. So you're creating a lot of different options here, but essentially, if you want to get your stake back early, you're going to pay some sort of fee, or you can wait the typical unbonding period, and there wouldn't be any fee involved with that, right?
Yes, exactly right.
But you're also getting the added bonus of being able to use that asset in your other financial kind of offerings. Okay, makes a lot of sense. So when you are liquid staking, so we talked a little bit about this earlier, like you're actually nominating people, you're not nominating validators on the relay chain. And so your algorithm is working in the background to find the best validators. Are
Mhm.
you planning on running your own validators like as Parallel Finance?
Oh, not at this moment. This is not the core business. We want to make the product accessible for more users. So we will try to develop more products and, make the UI, UX much better.
Hmm. Okay, yeah, that makes sense. And yeah, we already talked about how you're going to use past on-chain data as well as different variables, the commission rate, to formulate this scoring system in order to choose the best validators.
Hmm.
It's very cool.
Correct.
Another thing that I'm always curious about with these liquid staking mechanisms is what is the KSM going to be used for, right? Is if it's in the control of the protocol like Parallel Finance or Heiko, like how will that KSM or dot be able to be used in governance? How do you have any thoughts about that?
Yeah, yeah. So I think we just mentioned about that. So for staked dot, staked Kusama in our system, we are able to cast the votes on the relay chain, so people can still vote through the
Mm-hmm.
portals that we provide.
So you're going to be able to tell Heiko or Parallel how you want their vote to be cast. Okay, so
Exactly.
you'll just act as a proxy
Yes.
to vote. Okay,
Yes, exactly right.
that's awesome. I'm also interested about like the collateralization rates for when you're taking out loans, and I guess that might be getting into some of the other products that you offer with the P tokens.
Yeah, so P token is basically the token for the money market protocol. So if you supply any asset into our system, you got a P token. So for example, if you supply X dot into our system, you got PX dot. If you supply, Heiko, you got P Heiko into the money market, similar to C token on Compound, which is essentially an interest bearing token that represent your a future current interest and wrap your interest into that specific tokens.
Mm-hmm.
It's just an easier, nicer way to represent your ownership of the money market. It's sort of like a certificate of deposit of the money markets.
Mm-hmm. And so with these P tokens, you're then able to take out loans based on this collateral that you've put up. Is that, am I understanding that right?
So P token is just a representation of your current collateral. So you can directly, borrow against your position on the money markets if you have own some P tokens.
Okay. Cool. And so that brings me to the question I had is like the collateralization rate. So how much you're able to borrow against what collateral you have put up. What are your considerations around that, and how do you guys what's your strategy for that?
Yeah, so we're working with Scarlet, and then starting sometimes next year. So they help with Avi and Compound with their risk parameters, and then a lot of the suggestions on the specific collateralization ratio. For us, we started with dot related derivatives, so like C dots. X dot and dot itself and things like that. And then so the collateralization ratio is pretty high because it doesn't involve any liquidation risk, right? And then especially when you use the dot derivative as the collateral itself, and especially when it wrapped interest payments. When you borrow dot, it doesn't have price risk, so we give pretty high collateralization ratio, maybe 90% or even higher than that, so that people would have a pretty big incentive to keep on borrowing more dot from the system. And then we just ensure that the C dot or X dot can be able to redeem to the dot itself at 7 days or a year or something like that.
Mm-hmm. Okay. And you mentioned that Gauntlet's going to be helping you work out these parameters. And will there also be mechanisms by which the users can like vote on what these parameters might be and change?
Yes, all of them are votable. So technically, like we start to set the initial parameters, and then we also want to have community proposals to actually change based on the governance and community ideas.
Okay, cool. And then that brings me to the PX dot. So that's a fusion of the X dot and the P dot. Do you want to just like quickly talk about what that means?
That means that you are first stake your dot, and second of all, you put your stake dot into the money markets as the collateral to do whatever you want. So it's just a combination of staking and money markets.
Okay, makes sense. All right, so then now you also have this new kind of product called auction lending, which is yeah, very interesting, and I'm curious about that. So how does this work?
Yeah, so this is something we're super excited, and the crowd loan is the biggest market for Polkadot as a use case right now. Most of the dot has been used for crowd loan, and actually no, most of the Kusama. I think from the previous two batch, there are 800 million for 400 million for the first batch, like 400 million for the second batch. Worth of Kusama has been voted for the crowd loan, and then we noticed that problems exist in this space. Like liquidity is a problem. You have to lock your Kusama or DOT for a year or two, and then trust between the team and the investors. That is also another problem. You are trusting the team to give you tokens. What if there's no contract? Technically, there's no smart contract guarantee that. And then so we sort of wanted to improve the system by providing a platform solutions in the middle. So people use our chain, use our parachain to contribute to a specific crowd loans. So there are two ways to contribute. First is the normal way. So you just contribute and then boom, you help directly contribute to the relay chain. We just do a batch transactions. We don't hold you money, just go into our chain and go to contribute. And then people are gonna earn something called C dots. And then also they earn a normal project token. First of all, what is C dot? C dot is your certification of or your right to redeem the dot, underlying dot at the end of the lease period. And then it's 1-to-1 ratio. It's always 1-to-1 ratio. One C dot, meaning that you can redeem your dot at a specific pool at a specific time. And so the naming of that is going to be interesting. So you call C dot maybe dash Akala C dash Moonbeam or something like that. And then by using our money market protocol, you can actually pay the 1 year or 2 year worth of interest payments to borrow the whole money out, and then you can re-engage into the any other crowd loans to improve your capital efficiency. That's something we can do. Let's say that interest payment is like 5% a year. So if you just pay 5% a year, maybe you just sort of get your whole liquidity out and then do that again if you want. So you technically can repeat 20 times if that's something what people want, right? And then actually no, you can repeat infinite times, but that's not something we sort of encourage, because whenever you borrow more, the utilization of money market go up, so the interest rate is going to be higher. In the end, you might not want to do that anymore. So that's advantage one, which is provide liquidity by using the money market protocol. And then the other advantage that our platform provide is additional reward from our side and then the project side. So we talk to projects, and then we said that, hey, if we can help you guys raise $1 million, $2 million, $3 million, then they would provide some additional bonuses to our platform, and then we're gonna match the same platform. For example, if through our platform we help a project raise like $1 million, then the project provide 2% additional bonus. We will match that 2% additional bonus from Heiko or Parallel. So meaning that the user in the end will benefit from this collective volume-based discount to that specific projects, both from them and from us. And then obviously number three, we sort of mint those tokens on our chain. So in the end, obviously we want every single issuers or the teams to write the rules on our chain, right? How do you want to design the tier system? How do you want to incentivize? What is the vesting schedules and what is some special bonuses and how that works? Everything we are trying to get people write the code actually on chain, so that it is clear that this is how exactly the the crowd loan reward is going to work, instead of just some medium posts or like Twitter stuff. So that's kind of the three benefits of our first version of the platform. And then the second version of platform, we enables under collateralized loans, right? So the same thing here. You just need to pay the interest payments to the money market protocol, and then or the auction loan money market protocol, and then you can borrow out the whole principal amount to contribute to a specific crowd loans. And since there is no principal risks with participating in the crowd loans, then the money market protocol can give that credit to the user. Say, hey, go for it, and then just we know that the money will be returned after a year or 2 years, or after the project failed, the auction failed. Then they can just use that much more capital to sort of engage in additional crowd loans that they want. That's kind of how we think about the under collateralized loan for the users.
Okay. So the first part you guys have kind of spec'd out and ready to go, but you're working on the V2 kind of spec right now. And so people should look out for that white paper coming out soon, right?
Yeah, exactly.
Okay, I see. So there's one part there that I wanted to touch back on. So you want these projects that are launching their parachains to create these offers through your parachain. And so correct me if I'm wrong. So you've created a palette or the functionality on your chain to allow these projects to create offerings through you. And so how does that actually get implemented? Is that through like smart contracts, or are they actually like creating like runtime upgrades to your parachain to create these offerings? Like how does that get implemented?
Right now, they have to do so we write certain rules, like for example, the hard cap, soft cap, the vesting period, and then the like the basic like ending time, stop time, and things like that. So we just fix some parameters, and then we just need to do a governance runtime upgrade. In the future, I suspect that it will be helpful to write a code for, to provide a smart contract capability, maybe just Solidity contract for them to deploy. It's kind of a little bit further ahead of time. We haven't really clear, but for now we want to solve the bigger issues, which is the basic like what is the cap, what is the releasing schedules, and then we provide some linear functions. Eventually, I think it'll be great to have people to write code, develop on top.
Okay, so as it stands, this is baked into your runtime. It's baked into your to a palette, and you can enact these upgrades through a runtime upgrade. And so that's again like the flexibility of Substrate at work there, that you can like just make these arbitrary changes and upgrades to your chain. That's pretty awesome. I think we covered most of the products there. Maybe there's one thing that we didn't touch on, and that was the predictive yield curve. We touched on it, I think, a little bit, but this is like something new for like the automated market making protocol, right?
It is pretty much the same concept, which is essentially a new curve that helped lower the slippage for non-hard packed assets, such as staking derivative versus the denominated assets, things like that. And then our goal is to probably like create this sort of new market for the AMM. There are like the general markets, and then there are the stablecoin markets, and there are like things that are in the categories of non-hard packed asset, for example, interest-bearing tokens or staking derivative and those things. So when you trade staking derivative against the denominated assets, you definitely don't want to use the normal Uniswap curve, just because the slippage that it incurs, and then because the exchange rate or the intrinsic value can be predicted by the staking pellets, then we know what is what's supposed to be the intrinsic market price. So that's why we kind of design the curve that is designed to be traded in the intrinsic value range to minimize the slippage.
I think I saw a diagram about this, but this is done by adding a third token to the pool, right? So it's not just a 2-token pool. There's another token in there that balances these tokens out. Is that right?
Yes. So you have to have the other token to balance that out. It's kind of a stability pool that we call it, and then that will do the the arbitrage whenever the price is not equal to the exchange rate.
Right. I see. And so, yeah, that's kind of a concept that I've seen before in the balancer protocol, and where they have multiple assets in a pool, and you can set like the ratios between that. Is that something that you guys are moving towards as a direction? Or are you going to offer other multiple asset pools, or what's the idea there?
Yeah, so now at this moment, maybe we'll consider that in the future.
Okay, cool. And again, like these are made specifically for correlated assets, right?
True.
Yeah. Okay. And you're planning on staying in that space for the near future, as opposed to creating pools for uncorrelated assets, meaning like not X dot matched with dot.
Got it. So yeah, so we are creating pool for like correlated assets. For uncorrelated assets, we have a basic AMM curve right now, so like the Uniswap V2 model. And then for multi-assets, I think it will be in the future, not at this moment.
Right. Very cool. So yeah, as we discussed at the beginning, Heiko just launched as a Kusama parachain, and Parallel is going to be aiming to launch on Polkadot. Can we talk about what the differences between these two networks are? Because I think that is a main question. Like newcomers to the Polkadot ecosystem, it's a little confusing for folks. Like, why have two networks? Won't one make the other obsolete at some point? Can you share your thoughts on first of all, why you adopted this kind of framework, and then like let's discuss what the differences between the networks will be.
Yeah, so the Kusama network is the network that provide innovative features first. So I think we want to provide something similar. So on the Heiko network, this is the network that we build more innovative features and then test it on top or use it on top with like real world value. And then eventually, once the features is more stabilized, we move to the parallel network on Polkadot. I think that is the kind of the value of like getting more innovative features on top, and then like using it with the real world values on top. And then the other separation is really just how fast we can deliver on Kusama versus the more conservative approach for the parallel network on Polkadot. I think it's a deployment choice as well. So we do want to be like faster, much faster in terms of decision making on Heiko chain versus parallel.
Mm-hmm. So do you think that there will be any features that Heiko will have that won't make it over to parallel, or will it always be eventually parallel will get it?
I think eventually parallel will get it.
Yeah. There isn't anything like so experimental that you would never like bring it over, but it's okay to be on Heiko?
For that, I actually need to think about that. Nothing on my mind.
Yeah.
Mostly everything should be bringing to the Polkadot chain. I mean, if it's a really good feature, why not? If it's a bad feature, then both might just cancel it.
Yeah, that makes sense. So I guess the idea is if people want to experiment and have a little bit of as the catchphrase of Kusama is expect chaos. If people want to experience a little bit of chaos, they can use Kusama and Heiko and be on the bleeding edge of technology, because all the updates are going to happen there first before they make it over to the main chains. So I guess that's the value proposition there for folks. So we talked about a whole lot of what the platform offers, and we talked a bit about it being built on Substrate. And I know that you guys are a part of the Substrate Builders program that we have through Parity. And so I'm interested in what your experience has been in the SBP, and what have you built with that?
Yeah, so SBP, we work with a Substrate Builder program on the money market, liquid staking, cross-chain communication, XCM protocols, transfer tokens, and then things like that. Super helpful. And then we are, submitting our milestones and then, progresses constantly with them. And then, it's been great.
Cool. So like, how does that work? So you have an idea and then you submit your proposal to the SBP, and then they kind of like help you and walk you through implementing it and give you support. Is that essentially it in a nutshell?
Yeah, so it's more like we submit a milestone and we start to work on it, and then if we have questions, we will ask them. That's more like what it is.
Cool. And you guys had a milestone recently, right?
That's correct. Yes, we have the milestone recently for for milestone one. Technically, like we're still like delivering it. It's funny because we actually had developed multiple versions for the money market and staking protocols, and then we're just waiting for the review and things like that.
Mm-hmm. Great. Okay, so I think that that brings us closer to the end. Do you want to mention anything else on how people can get involved with your project, or any like kind of call to action for folks here?
Yeah, so definitely follow us on Discord, Telegram, Twitter, and then ask our team any questions. One more thing, we are hiring for multiple positions. We're trying to expand the team, so including engineers, Substrate engineers, front engineers. We're hiring for head of marketing, community managers. We're hiring for BD positions, and then many positions in this space. And check out our website career page. And then I think the best call to action will be follow us, and then if you are interested, we'll definitely be in contact if you are interested to join.
Awesome. Okay. I want to thank you very much for taking the time and coming to chat with me. I learned a ton, and I'm excited to see all of the innovative technology that you are building with Parallel and Heiko. So thank you very much, Yubo, for coming.
Yeah, thank you so much.
Thanks for joining us this week on Relay Chain. We'd love to hear your thoughts on the subjects we talked about today. So please reach out to us on Twitter @RelayChain or by email podcast@parity.io. The team at Parity has some of the brightest minds working towards building a robust and inclusive ecosystem that puts power back into the hands of its community members. With cross-chain communication as a primary goal, we aim to break down the tribalistic barriers that have formed throughout the blockchain industry. If you want to learn more about what we're building, or if you want to join our team, visit our website at parity.io and sign up for our newsletter at parity.io/newsletter. The content presented on Relay Chain is not financial or investment advice and should not be viewed as a recommendation to support any specific project. The views expressed are the personal opinions of the podcast guests and hosts and are not necessarily shared by Parity Technologies or Web3 Foundation, who do not endorse or guarantee the accuracy of the information provided.